And we are currently doing recording of business transactions.
Okay, recording of business transaction. So should we start with introduction to accounting or recording of business transaction?
Recording of business transactions.
Okay. So the first thing, you know the definition of accounting. Can you tell me?
Accounting means classifying, recording, and summarizing in monetary terms in of money transactions and events is known as accounting.
Okay. So accounting, recording of transaction, classifying, and summarizing the transaction in monetary term. Okay.
Okay.
Okay. So which type of transaction are recorded in our accounting?
I don't know.
Okay. Actually, transaction which are financial in nature, we record those transactions. Okay. So
Okay. Financial correct.
yes, financial transactions. So you can see this basic accounting concept definition. Okay, so first we will revise these topics. After that, when I will be confirmed that you know these things, then we will move further. Okay.
Okay.
Okay, so the definition is accounting is an art of recording, classifying, summarizing the business transaction which are financial in nature in a significant manner and in terms of money and interpreting the result thereof. You can see there are different words written here. First is a recording. First is a recording, then classifying, summarizing, and transaction which are financial in nature and in terms of money, interpreting the result thereof. So can you tell me, when you go to a shop, generally whenever we go to a shop, they record whatever you purchase from that shopkeeper. They record these transactions in their computer or in old times in their books. Yes.
Yes.
Okay. So because of limitation of human mind, we record the transaction to remember those transactions. Okay, so that we can look in our books and see any transactions. That is okay. Wait. Yes. So we look for any transaction that we don't remember. Okay, so that's why we record the transaction in our books. After that, what is the meaning of classifying? Can you tell me?
We classify the categories, what we have bought or what is like debtors, creditors, or whatever we stock goods, whatever we bought, we classify it.
So what is the objective of classifying? Why we need to categorize the transaction?
So that it will be easier for the person to know, remembers.
Yes, to know the balance. Actually, whenever we sell or purchase items from someone or to someone, then if transaction is on cash basis, then we don't have to remember the transaction. But if transaction is on credit basis, then that person can ask that how much amount he has to pay us or how much amount we have to pay him. Okay, so that's why if we record all the transaction related to that person at one place, then we can easily find out what is their balance. Okay.
Okay.
Okay, that's why we classify the transaction. In the same manner, if we want to find out the expenses in any particular year, then we will write all the same type of expenses at one place, and then at the end of the year we can total the expenses and find out the total expenses in a year. Okay.
Okay.
Like if we pay wages, if we pay salary to our employee, or electricity expenses, so we pay the amount in every month. Okay, and if we try to find out the total electricity expenses, then we have to go through whole book, because the transaction will be recorded in every month. Yes.
Yes.
Okay, so at the end of the year, if we record all the transaction at a single page or at one place, then we can easily find the total electricity expenses or total wages we paid. Okay, that's why we classify the transaction. Now, what is the meaning of summarizing?
We summarize it all so that we get an idea of it. Later, when we go through it, we can go through it. It will be easier.
Okay, actually,
Yes.
summarizing means when, let's say, there is daters called name A. Okay, and we have different transaction with A in a year. So like we sold some goods, we received some money, and we recorded all the transaction at one place, at one page. But what is the final balance? That is called summary of the total transaction we have done with A. Okay, so we find out the actual balance, amount payable or receivable from A, and then we write this amount in trial balance. Actually, we have to prepare some account named trial balance. We will discuss that later. So we put them at a place with other accounts name. So it is a list of account we prepare so that we can find out the balance of each and every account. Okay, and then with the help of these balance, we calculate our profit or loss. Why we calculate profit or loss? Because we want to know the performance of business. So we want to calculate profit or loss or financial position of the business. Okay, is that clear?
Yes.
Okay, so if you are doing a business, whatever your the result of business is, you want to know the result. Yes.
Yes.
Okay, so if there is profit or there may be loss. So if there is profit, it is good for the business and for you also. And if there is loss, then you want to know what is the reason behind that loss. Yes.
Yes.
Okay, so can you tell me what you will do after knowing the fact, after knowing the reason behind such loss?
I will find ways to stop the loss.
You will take some corrective actions.
Measures. We'll take some measures to correct uh, how the loss.
Whatever wrong is going on in your business.
Yes.
Yes. So in the same manner, if a student is studying, like in 10th or 12th, you are studying. So sometime you get good marks in some of the subjects and you get low marks in some of the subjects. Yes or no?
Yes.
So you try to find out what is the reason that you get low marks in any of the subject. Okay. And then you try to uh, cure, you can say, you try to correct the problem areas.
Yes.
Okay. So this is what we do in business also. We find out the profit or loss. It is called summarizing. Okay. And then we analyze these profit or loss and interpret the result. Okay. Interpret the meaning, or we can communicate with business owner or whoever wants to get information from our business. Okay. So we give information about our business to those persons about our business. So we calculate profit and loss, we interpret the result, reason behind any good or bad thing happening in our business, and then we communicate to some other person interested in our business. So this is called summarizing. Okay, now transaction which are financial in nature means we don't record any transaction which are not in financial nature. Okay, because when you do some social work where money is not involved, okay, so you don't record those transactions in business. Like in business, there are many employees working. Yes.
Yes.
And we record the items purchased or sold in business, but we don't record the quality of our employee. Yes or no?
Yes.
Why? Because quality of an employee cannot be measured in monetary terms. That's why we don't record those type of transactions. Yes.
Yes.
And in the same manner, if transaction is not done with objective of finance to get some money, then we don't record that transaction also. Okay, so this is financial in nature and in terms of money and in a significant manner. Okay, so there is rules and regulation to record transaction. That's why it is called in a significant manner. So this is your definition of accounting. Now tell me, you have any doubts in this definition? You have any question? You can ask.
So summarizing means calculating of profit or loss.
Summarizing means you list the account. You prepare the list of accounts. Okay.
Okay. List
And
of
then with the help of this list, you calculate profit or loss.
Okay.
Profit and loss and financial position.
Okay.
What is financial position? Can you tell me?
Financial position means at the end of the year, we prepare a balance sheet
Yes.
to in order to find the financial position.
Yes. To prepare the balance sheet, to know the financial position, to know how much assets we have and how much liability we have to pay. These are our financial position. Okay.
Okay.
Okay. Now, what is accounting cycle? Can you tell me?
I don't know.
You don't know the accounting cycle? Actually, you can see the definition. This is this will indicate the accounting cycle. You know the food chain. Have you studied it in I think biology? Food chain.
Yes.
Yes. In same thing. It's your accounting cycle. You can see. First, we do some transaction, and then we identify and measure in financial transaction. Okay. Actually, there is a mistake. Okay. So identification and measurement of financial transaction. So you find out the financial transaction if any happen in business, and you calculate in amount. Okay, so whatever the currency of that country, you record those transactions in monetary terms. So measurement, and then you record the transaction, classify, summarize, and then analysis, interpretation. Actually, there is one more thing: interpretation and communication. Okay, and then this cycle repeats. So first, we identify transaction. We know that this transaction will be recorded or not. Then we record the transaction, we classify them, we summarize them, we know the reason behind such results, and then we interpret the transaction, interpret the result, and communicate it with owners and person interested in our business. Okay.
Okay.
These are basic accounting, actually. Introduction to accounting. You told me that you have completed this introduction to accounting. So these are parts of introduction to accounting. Okay.
Okay.
What is branches of accounting? So you can see there is 3 branches of accounting: financial accounting, cost accounting, management accounting. Apart from these, there are several other branches, but we don't have to study it right now. We will discuss that later. So these main branches of accounting: financial, cost, and management. Do you know anything about these?
Our teachers did teach it, but they taught it very fast. I didn't get time.
You didn't study this branches of accounting?
No, our teachers taught in the classes and gave us notes, and they were like, we had 2 teachers, so they were taking it alternative.
Okay.
So
Okay.
I studied it fast.
Just wait. Actually, your voice is a little slow, so I take my earphone. Okay. Am I audible?
Yes.
Okay, good.
I
So,
think it will be better if you could take the classes of basic terms first.
okay, basic accounting terms first. So
Yes.
we start from beginning.
Yes.
Okay, good. So actually, this is our first concept, the beginning concept, introduction to accounting. After that, I will tell you or define the basic accounting terms that we will use in future. So we'll discuss those also. Okay.
Okay.
Okay. So branches of accounting. There are 3 branches you can see here: financial accounting, cost accounting, and management. So there are different areas in any business. Okay. And these are the branches related with those areas. First thing is financial accounting. I told you definition of financial accounting just now. You can see the definition is same. Accounting is an art of recording, classifying. So financial accounting definition is already discussed. Second is cost accounting. What is cost? Can you tell me what is cost? Not cost accounting. What is cost?
Cost means the item you purchased and the cost of it.
The item we purchase. means expenses incurred on any product or service.
Yes, expenses income.
Okay, so you purchase any item and you pay some amount for it. Like if we purchased a mobile phone and we pay 15,000 for it, it is our cost. Yes.
Yes.
But what if we have to pay some freight or carriage for that product? Then
Carriage means?
freight or carriage means amount you have to pay to bring that goods from some other place to your place.
Oh, yes.
Okay, you can use transportation charges. You don't know the meaning?
No.
Okay, let's say where you are living right now.
Saudi Arabia.
Okay, so let's say you bought some goods from India. Okay, and
Okay.
you have to pay some shipping charges for that product also. So you bought it for 15,000 and you have to pay 1,000 for shipping charges. Okay,
Okay.
shipping charges, you understand?
Yes.
You can also it is also like freight. Okay.
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 So extra. Okay.
Okay, so you purchase that product for 15,000 and you paid 1,000 for shipping charges. So total cost you incurred will be 16,000. Yes or no?
Yes.
Okay, so this is our cost. So expenses incurred in getting some product. Okay, so cost accounting deals with that cost and calculation of sale price of that product. Okay, so whenever a company try to find out the sale price of a product, because when you produce a new product, when you produce a item, okay, so you want to know the cost and you want to find out the sale price at which you will give it to the customers so that you can make profits.
Okay.
Okay, so let's say we produce some books. Okay, let's say T.S. Grebal double entry system book. Okay, so the total cost we incurred, the actual cost incurred on page and printing is 300 rupees. Okay,
Okay.
and we want to earn 20% profit on cost. So at which price we will sell this book?
What was the previous cost?
The cost is the cost is 300 and you want to earn a profit of 20% on cost. So sale price.
So we will sell it on 320. 320.
Okay, actually you calculated it 20% on cost, means you have to calculate this 20% on 300. You calculated this on 100. Yes,
Yes.
but you have to calculate 20% on cost. You can see here I have written this. What is 20% of 300?
Could
Alina,
you say the answer?
what?
Could you say the answer?
Okay, actually, you can calculate percentage like this. If you have to calculate on any amount, 300 multiplied by 20%. So you will get 60 rupees. This is
Okay.
your profit. This is your profit. This is your cost. So total sale price should be 300 plus 60, 360. Is that clear?
Yes.
So in cost accounting, what we do is find out the cost, and then we add the expected profit on that cost, and then we calculate the sale price of that product. Okay.
Okay.
So cost accounting is related with calculation of cost and sale price of the product. The third is management accounting. Okay. So what is the work of management in a company? What they do actually?
They take decision.
Yes,
They
they
make
take
decision
decisions. Okay, very good.
and gives required information.
Okay, so what they do is they take information from our business, from industry and the environment, and then they take decision on the basis of such information. So first of all, they need to get some information about our business. So from where they will get this information is financial accounting and cost accounting. So what they do is they get the information from financial accounting and cost accounting on the with the help of some tools and techniques. They get some information and then they take decisions. Okay.
Okay.
Okay. So this is management accounting. We use some tools and techniques from the financial accounting and cost accounting data, and we get some information from those data and then take some decisions for our benefit, for benefit of business. So these are branches of accounting. If you have any doubt, you can ask questions.
No doubt.
So it's clear. Saudi Arabia currency is Riyal, I think.
Could you repeat?
The currency in Saudi Arabia is Riyal, I think.
Yes.
Okay. Okay, now this is our branches of accounting. Now there is two terms, basis of accounting and system of accounting. Okay, so whenever we record transaction, I told you why we record transaction, to remember it, to get the important information from those data. So we record those transactions on the basis of these two methods, cash basis and accrual basis. Okay, so I'm giving you an example here. Here, let's say we purchased some goods, purchased furniture of rupees 5,000 from A, paid 2,000 now and 3,000 after 1. Okay, you understand this transaction?
Yes, it's a credit transaction.
Actually, we have paid some amount in cash and we have paid some, we will pay some amount in future. Okay, so purchase furniture of rupees 5,000 from A, paid 2,000 now and 3,000 after 1. Okay, so there is two methods I told you, cash basis and accrual basis. In cash basis, you record the transaction only when there is some cash inflow or outflow. If there is no cash outflow or inflow, then you will not record the transaction. Is that clear?
Yes.
Okay. In accrual basis transaction, in accrual basis accounting, you record the transaction whenever it happens, either on cash basis or on credit basis. You don't consider it for recording. Whenever transaction happen, cash inflow or outflow is not given, no problem. We will record the transaction accrual basis, but not in cash basis. Okay, so there is a basic difference between these two basis. Is in cash basis, you record transaction only when there is cash inflow or outflow, and in accrual basis you record the transaction whenever it happens without considering the cash inflow or outflow. Is that clear?
Yes.
Okay, so that's why I have written this example, so it will be clear to you in both of the case. Okay, so the transaction happens on, let's say, March 1st. On March 1st here, the transaction happens. So we will record here purchase of rupees 2,000. Purchase of rupees 2,000. And here we will record the purchase of 5,000. Okay.
Yes. Okay.
Can you tell me why we are recording the purchase of 2,000 only in cash basis?
In cash basis, we record when the cash is in flow. So we paid 2,000. So we write it down.
Yes. Very good. So in accrual basis, we record the transaction whenever it happens.
So it is.
We will record the purchase of 5,000 and cash payment of 2,000. Okay.
Okay.
And after 1 month, that is April 1st, we will record here purchase of 3,000. And we will record only cash payment of 3,000. Okay.
Okay.
So in cash basis, there is a problem that you will not record any credit transaction. So if you purchased for rupees 5,000 and you pay 2,000, you will record only 2,000. And after payment of the balance amount, you will record the balance purchase. So what happens here that you will not remember that you have to pay 3,000 to someone. Yes or no?
Yes.
Because it is not recorded in your books that you have purchased on credit basis. Okay, so you will not remember this, that you have to pay 3,000 to someone.
Okay.
So what do you think now? Which one is better?
Accrual basis.
Okay, yes, the accrual basis is commonly used in every business. So we also find out the accrual basis is good, but cash basis is used at some places, like where the business transaction are mainly on cash. not on credited. So if there is no credit transaction, then no problem. We will record the transaction on cash basis also. Okay.
Okay.
So accrual basis is the suitable method for any business. Okay. So now this concept is clear to you. In cash basis of accounting, transactions are recorded only if there is a receipt or payment of cash. Credit transactions are not recorded in cash basis of accounting. This method is generally used by government or non-profit organizations. Okay.
Okay. Clear.
And in accrual basis, in this basis of accounting, transactions are recorded when they occur irrespective of cash payment or receipt. In other words, in this method, credit transaction is recorded along with cash transaction. So we record every transaction whenever it happens in accrual basis. Okay. Now single entry system and double entry system. What is system of accounting? Actually, if you have any problem in understanding any of the concept, you can easily ask question without hesitation. Okay.
Okay.
So any word or any topic you don't understand, you can ask questions. Now, double entry system and single entry system. So in the beginning of accounting, there are various methods used by every person. Okay. So if you at present, if you go to small shops, you will find that they record the transaction in their own manner. They don't know any rules and regulation of accounting. They don't know the methods of recording the transaction, but they record the transaction in their books. Okay, in their own manner. So there are many small shopkeepers or shops, and they record the transaction in their own manner. So their transactions recording process is different, okay, with each other. Yes or no?
Yes.
Yes. And now just assume that you are one of the shopkeeper, okay, and you go to another shopkeeper shop and you see their books of account. So can you easily understand that book or not?
No, I can't.
You cannot, because they have recorded the transaction in their own manner and you are recording the transaction in your manner. Yes.
Yes.
So there is no common practice. That's why double entry system is created to make all the methods same, so that we can easily understand each other books of accounts. Okay.
Okay.
So before double entry system, we use single entry system. Means we record the transaction in our own manner, and in basic terms, like we record only credit transaction, or we record the purchase or sale to some persons. Okay, so we only record the personal transactions and cash transaction. Other than these, we don't record any transaction. Like if we have paid some amount for wages, we don't record that. If we have paid some amount for electricity expenses, we don't record that, because these are nominal accounts and we don't record these transactions, because our business is small and we don't have to remember these transactions. Okay. So in small businesses, they don't know the rules and regulation methods of accountancy, so they record in their own manner. And how they calculate profit in this system, because their method is not good, so how they calculate the profit, this is the important question here. Because if you don't record all the transaction, okay, so you will not be able to calculate the profit. So they easily calculate profit with a simple concept like this. If you are you have 5,000 cash balance in the beginning, and at the end you have 10,000 cash balance. Okay, so this is your 5,000 profit. This is the simple concept. Okay, you can easily calculate this. You will see the opening balance of cash in your hand and closing balance of cash in your hand. So you can easily find out the profit. So this is single entry system. It is not correct, but it is easy for understanding purpose. Okay.
Okay.
So that's why double entry system is created, so that every person will record the transaction in the same manner and we can easily understand each other books of accounts. So that is called double entry system, and we record all the transaction with the rules and regulation of accounting, with the methods to record the transactions. Okay, so this is your system of accounting. Now, the basic accounting terms we will use here in our 11th and 12th accountancy. You can see here capital. You can see the capital is written.
Yes.
Okay. So the amount invested by owner in business is called capital. Whenever you start a business, if you are starting a business, you have to put some amount, put some cash in your business. Yes or no?
Yes.
Because without money, you cannot start a business. You have to either you have to give some amount in business, or you have to borrow some money from bank or other financial institutions. So you put some amount in business and then you start the business. So that amount invested by owner is called capital. Okay.
Okay.
Okay. What is drawing? Amount withdrawn by owner from business for his personal or household use. I think you know the drawing concept, because these are
Yes.
basic. Yes. Okay. So can you tell me?
Drawing means the amount or the money that the business, the owner takes it for his personal use. For example, buying a car, buying a house, yeah, etc.
Yes. Yes. So whenever you are doing some business, there is no regular income here. Yes. You cannot start a business and do some other works part time. So there is no regular income generally. Sometimes there is, but there is no regular income generally. Yes.
Yes.
So for your household use, for your personal expenses, you withdraw some amount from business, and that is called drawing. Okay,
Yes.
good. Now you can see here expenses and income written. So can you tell me what is expenses and income?
Expenses means example, rent paid,
Okay,
bills, like that is expense.
okay. So you have to pay some amount to for some products or services for running your business. Okay, and that is called expenses of the business. Like if you are running your business in rented house, then you have to pay rent. You have to pay electricity expenses. You have to pay wages. You have to pay salary of any employee you have. So these are expenses we have to do. We have to pay for running our business. Okay.
Okay.
The next is income, means you are doing some
In,
business and yes, you are saying something.
no, I was gonna say the answer.
Okay, you can say the answer.
Income means excess of total revenue over expense.
Excess of total revenue over expenses.
Over
Yes.
total expense. Yes.
Yes. So in any business, you have some products to sell, and you sold these products in the market to the customers, and you receive some amount. It is called revenue. Okay.
Yes.
And when you deduct your expenses from that revenue, it is your income. Okay.
Yes.
Okay. Now, debtors and creditors. So when we sell our goods on credit basis to some person, that is our debtors. Okay.
Okay.
And in the same manner, when we purchase some goods on credit basis, they are called creditors for us. Now, what is bad debts?
What did you say?
Bad debts.
Bad debts?
You don't know?
No. Could you say the spelling?
Yes, B-A, I will write here. Bad debts.
I don't have a clear definition, but I think um, mm, you you take money from someone and you have to pay the money, but you don't have enough money to pay them back, and you're in trouble. You have intense loss.
Okay. Yes, but it is just opposite. Your definition is good, but it is just opposite. You have sold some goods to someone, and he is not able to pay you money back.
Okay.
Okay. So that is bad debts for us. Means our money is now gone. We will not receive that money.
Okay.
So that is called bad debts. I think you know the discount. Discount is
Yes, just
famous
reduction of
over
price of
reduction in
sold.
price. But do you know there is two types of discount?
Yes, there is trade discount and cash discount.
Yes, very good. And what is their use?
Trade discount means discount which is allowed in agreed percentage of the list price,
Okay,
and cash discount, it is given on the time of periods for a timely period.
timely payment.
Yeah, time of period.
Actually, when we want to receive money from our customers earlier, so we give them cash discount, that they will receive the cash discount and pay the money earlier.
Okay.
Okay. And what is trade discount? When you go to a shop and you see the poster there, that flat 70% discount, flat 30% discount. This discount is for every person. Yes.
Yes.
So it is trade discount. Actually, it is not actual discount. Generally, there are some manipulation in trade discount. So it is just, you can say, a discount for name only. They
Okay.
generally increase the price and then give you the discount.
Okay.
So like, let's say if jeans, uh, you want to purchase jeans and you see the discount flat 50% off. So the actual price of jeans is 1500, but they will increase it to 2500 and then give you 50% discount. So 2500 into 50%, it is 1250. The cost of jeans for you is 1250. But you will see that you get 50% discount, but it is not, because the actual discount that you receive is 250 only.
Okay.
Okay, so this is trade discount, where companies manipulate their list price and then give you discount. So trade discount is nominal discount. That's why it is not recorded in our books. Okay, you will just calculate the amount with the help of percentage of trade discount, but you will not record that discount in your book. If it is actual expenses, then you will record that discount, yes or no?
Yes.
That's why it is nominal discount, means it has no value. Okay, they just manipulate the price. Okay, and cash discount is actual discount, because you sell the goods and if you receive the amount from the customer without any early payment, you will not give him discount. So you'll receive full money from that customer. Okay. But if you give them cash discount, in that case, you have to lose some money. Yes.
Yes.
And it is different from person to person, because you cannot give everyone same cash discount. Okay. Someone will pay after 1 month, someone will pay after 2 months. So you give them discount, cash discount accordingly.
Okay.
Is that clear?
Yes.
Okay, so these are basic terms. There are some other items, other terms that we will discuss. Just wait. You know the depreciation? Depreciation. Hello, Alina.
Um.
Yes.
Reduction of value of assets.
Okay.
Could you?
Yes. Okay, let's say, do you have a bicycle?
Yes.
Or a motorcycle?
No.
Okay. So you use your. Can you tell me the purchase price of this bicycle?
Maybe 120, 300.
120,
300.
300.
We will go for 300.
Okay. You are not sure, actually. Okay,
I don't
so
know.
okay, no problem. We'll just take 300. So your cycle price is 300. You purchased it in 300. Now, can you tell me that if you want to sell it after 2 years, you will get this amount or not?
Maybe not, because it's used.
It's used. So let's say you will get 200. Okay.
Okay.
And there is a second case. Let's say you don't use your cycle in these 2 years, because you purchased it and you move in other country. Okay, so you don't use this cycle in 2 years. Now, can you sell it for 300?
Maybe it can be sold.
No, it will not get you 300, because the time factors there when you purchased it. Okay, it is new, but when you sell it, you haven't used it, but it is old for other person. Yes or no?
Yes.
Yes. So he will not pay you 300 for that cycle.
Okay.
Okay.
But what if the item is old and the person really needs it? What if he pays more than 300?
Okay. Actually, these are conditional portion, situational. So in that case, he can pay you 400 for your cycle.
Yes.
Yes. So we are not taking different situation. In general, we are saying that he will not
Okay.
pay you 300. Yes.
Yes.
So if you are saying that if that person needs cycle, and in that case he will pay you 400. But what if you need the money and you are ready to sell it in 100 rupees? Sorry, 100 real.
Okay. Yeah.
This can happen also.
Yes, it can happen.
Yes. So these are different situation. We are not discussing it. We are taking general situation where buyers are knowledgeable and he knows the price, and you are also a knowledgeable seller and you know the price also. So in that case, generally the product value is decreased. Okay, product price is decreased and you will not receive the same amount in future. Okay, so it is said that when you use a product and when there is some time spent after purchasing a product, okay, maybe there is some accident happens with that product. So in all